Alain Mudie, welcome on UBP TV. Recent events in the Eurozone have created a resurgence of risks in the region. Are you still bullish equities in spite of this environment?
Yes, we are. In our 2013 outlook, we highlighted the fact that one of the key risks for markets would be from the political sphere, mentioning, for example, the fiscal cliff debate in the US or the ongoing crisis in the Eurozone. So what we've witnessed is not a surprise. The market, we believed, would climb the wall of worry, and hiccups in the market or pullbacks would be opportunities to add to exposure, as indeed we did in the aftermath of the Italian election. Our conviction remains that equities will be the top performing asset class in 2013, given the outlook for earnings, given the high dividends, and given the flows of funds which are beginning to move back into equities. During the Second World War, Winston Churchill said of the Americans that they can always be relied upon to do the right thing, but only after exhausting all other opportunities. Our sense is that the Eurozone authorities are following the same game plan, but they will, in due course, do the right thing and resolve the crisis that they have.
Alan, within equities, which specific sectors or geographical areas do you favor?
We remain bullish on Japan, for example. Our scenario was that with the change of government, we would see a new regime in terms of economic and monetary policy. That's proving to be the case, and with the arrival at the head of the Bank of Japan of Mr. Kuroda, we think that the next phase will see continued monetary accommodation in Japan and continued weakness in the yen. We remain bullish on the direction of Japanese equities, but we hedge the yen exposure. We also like the Eurozone, where prices today reflect all of the problems that we know and where value has been created. Talking of sectors, we'd highlight in the cyclical sphere industrials. The market is cheap relative to its history. The outlook for growth in the US and China is strong. And we think that industrials will continue to outperform global equities. We also like healthcare. Healthcare where the focus is increasingly on providing healthcare and pharmaceutical products to emerging markets, which are growing at a double-digit rate. And talking of some stocks, I'd mention two, both European stocks. The first is Prysmian, which is an Italian cable manufacturer. They are number one in subsea or submarine cables, which is an area which benefits from the move towards renewable energy, for example, and that stock is extremely cheap, trading at around 10 times forward earnings. Or in healthcare, the French company Sanofi, which has 32% of its sales in emerging markets, which is a leader in diabetes, a leader in vaccines, a leader in animal health. And the stock is cheap relative to its peers, it's growing in line with peers, and it boasts a 3.6% dividend yield, which we think is extremely attractive. So those are some highlights: Japan, Eurozone, industrials, healthcare, Prysmian and Sanofi in particular.
Alan, is gold still a favorite despite its recent lows?
Unequivocally, yes. I mentioned earlier that we'd increased our exposure to equities, and to finance that, we've shaved some of our exposure to gold, but it remains a sizable part of our portfolios. Gold has done well recently, showing its diversification benefits as the market has reacted to the ongoing situation in Cyprus. Taking a broader view, gold remains supported by a supply and demand imbalance. Exploration for gold and new discoveries have declined markedly from the highs registered in the 80s and 90s. And a new source of demand from gold has emerged in recent years from central banks. On average, between 2002 and 2007, central banks were sellers of gold to the tune of some 400 to 500 tons per annum. Last year, they bought over 500 tons, demonstrating the fact that demand is there for gold, even at higher prices. And finally, gold is the currency, we feel, which is best placed to benefit from the debasement of fiat currencies, given the monetary policy settings of central banks worldwide.
Alan, thank you very much.